guys, welcome to this ReadySetCrypto video. So for those returning and subscribers, thank you so much. And for those new here, we're ReadySetCrypto and we uncomplicate cryptocurrency. We want to empower you to become the best crypto analyst and trader that you can be. We want to guide you through the minefield of bad advice and danger you will face as a new crypto investor. We want to teach you all that we know so that you can seize this opportunity. Our policy is that we don't accept donations and we don't do paid reviews. We never have and we never will. We made this channel because we were sick and tired of people hiding their motives and their sponsorships. You deserve better. Crypto deserves better because this is bigger than any of us. You know, we put a lot of time and effort and love into what we make because we want this channel to be about you, your success, your journey, your opportunity. So if you're totally new to crypto or even somewhat seasoned, we set up a free crypto college course on our website, ReadySetCrypto.com, which you can get access to by subscribing to our newsletter. This will cover all of the common questions you might have about crypto. For example, what am I investing in? Why does Bitcoin have value? Is it a scam? How do I buy it? How do I secure it? What's the blockchain? Why is cryptocurrency important? It's a series of 15 videos and it's over 2 hours of free, high quality, well put together content. And I really think it's some of the best videos I've ever made, and I'm really proud of the work we put into them. It also has some fun quizzes I think will help you out a lot. And again, it's completely free. It's our hope that you find them useful and will help you answer some of those big questions. And guys, we're also very proud of the free ebook that's on our site as well. It's about 70 pages and it's meant to be a very light read. It's meant to be a great intro for those looking to get into this space but don't know how. Again, both are totally free just for signing up for our free newsletter. You know, we're giving it all away because we want to help you get into this space, to be a crypto investor and to seize this opportunity. Okay guys, so let's talk about your education getting into this space. If you're investing in crypto, you're joining the investor class. But what does that mean? Being an investor means being educated. Before you even touch investments, especially those as high risk as crypto, you need to understand the fundamentals. One of the key realizations is how you look at money. To most people, money is a paycheck. It's a sore subject because they never have enough of it. And when they do, they spend it unwisely. You need to look at money as a literal representation of your time. When you work for someone, you are trading your physical time on this earth, your life, which each of us only has so much of, for money. Put that way, it really doesn't seem like a good deal, does it? This is why I recommend Your Money or Your Life by Vicki Robin as a great way to reframe your relationship with money. It was life-changing for me, and I hope it is for you too. I also really love Mr. Money Mustache and his blog about financial independence, even though he doesn't like crypto. But people say to me, okay, I've cut out Starbucks, I've cut out the useless gym membership, I'm really frugal, I've sold all my useless possessions for extra capital, but I still feel like I'm barely getting by and I don't have much to invest. All right, so first off, good job getting your personal finances under control. It's what I refer to as bottom-up investing. And when you've done that, you're ready for the next step, the top-down investing. You need to expand your streams of income. Are you working a job? That's just one stream of income. What happens if you lose that job? You have nothing to fall back on. Did you know that millionaires have an average of 7 streams of income? Let's put this another way. Warren Buffett said, if you don't find a way to make money while you sleep, you will work until you die. And that's not hyperbole. That happens to people every day, unfortunately. I can't get into all the possible methods that you can employ to expand your streams of income, such as real estate or owning a business, whatever. But investing is one of, if not the best additional streams of income you can have. Why? Because you make money without having to do anything. This is capitalized in some additional books we recommend. Check out The 4-Hour Workweek by Tim Ferriss to understand how this lifestyle can be yours. We also really like The Millionaire Fastlane by MJ DeMarco, as it really eloquently describes being in the slow lane, being an employee and working until you're 65, versus being in the fast lane as an investor and retiring to a beach and a pina colada when you want to. Remember, your money should always be doing something, and that's why you're part of the investor class. Lastly, just for fun, we like Grant Cardone's free ebook, The Millionaire Booklet, as it's a nice piece of motivation and teaches you to stop making excuses and start making plans about how you're going to change your life. Look, guys, I know self-help books sound boring and a waste of your time when all you want to do is get rich. But we really believe books such as these have helped shape our perspectives to allow us to capitalize on opportunities. This stuff takes hard work and discipline to be good at. If you jump in feet first, you're going to get burned, and we'd hate to see that happen to you and for you to walk away from this amazing opportunity because of that. So to that end, let's cover some rules that have helped us to be very successful in trading and investing in crypto. And remember, we're not financial advisors. This is not financial advice. This is a video on the internet produced by a crazy person who you should clearly not listen to. With that out of the way, our first rule is don't invest what you can't afford to lose. A good addendum to that is that you don't have more than 5 to 10% of your entire investment portfolio in crypto at the maximum, and only invest what you can afford to have locked away for the long term. Let's say we have a major correction tomorrow. You need to be comfortable with losing 90% of your portfolio value in case of a crash and just sitting back and letting it slowly recover. One way to mitigate your risk is once you double your profit, pull out the principal so you're only playing with profits. Doing this, only playing with what you can afford to lose, is really just treating it like money you've already lost. And that's going to turn you from being an emotional trader and investor to someone that operates with logic and reason. The second rule is understanding FOMO, the fear of missing out. As Doc covered yesterday, your worst trades will often feel the best getting in, and your best trades will often feel the worst getting in. FOMO is a powerful force. You will see a crypto going 100% and you'll feel like you're missing out on an amazing opportunity. But oftentimes, if that's your line of logic, you're not evaluating the fundamentals. You're not doing your due diligence. You're chasing a pump, which often leads to a dump, and suddenly you're a bag holder. Our third rule is just that. Don't chase pumps. Crypto is unregulated. It's the Wild West of trading. Pumps and dumps are illegal in traditional markets. But because regulations haven't caught up with crypto just yet, pumps and dumps happen every day. Just look at the list of the top gainers on CoinMarketCap for an idea of how persistently this happens. You'll see a 1,000% gain on a coin worth less than $1 million over 1 hour. And yeah, that's a pump. Like we just said, pumps are followed by dumps. Do not, under any circumstance, join a pump and dump group. You will get burned and you will deserve it. Furthermore, regulations are coming soon, and if you're caught doing that, you could face legal repercussions. Just don't do it, and don't listen to anyone suggesting it. So to highlight our last two rules, you will miss out on these so-called moon missions, where a legitimate coin goes up a lot. And trust us, it hurts when you are in that coin and you sold out early. It's like not being invited to a party. You're gonna miss out on opportunities, and that's okay. And no one knows the future. Don't put yourself through the game of playing what if, or if only I had done this. You're not doing yourself any favors by beating yourself up needlessly. Understand why you missed that opportunity and try to learn from it. You were so early to this space that there's going to be new opportunities every day. You just need to put in the hard work and build your experience. Minimize your risk, and success will come to you. We're here to help you do that. We want you to succeed, and we know you can. So to follow up on our last rule, our fifth rule is that everyone loses money. That's the nature of the game you signed up for. Everyone loses sometime. It happens. Trust us. That dopamine fix you get from seeing your position double will make you feel like a genius, and it's human nature to want to advertise it. What you forget is those who lose money keep quiet about it and don't advertise their failure. It's called survivor bias. We're not going to pretend that it happens every day that someone gets into crypto and makes terrible mistakes and they walk away with their lives ruined. And it's irresponsible not to discuss with yourself your exit strategy. You need to begin with the end in mind. Just like how you need to know where you're going to sell a position if it goes well, you need to know when to get out. Don't get trapped. With that in mind, building a solid portfolio is key to minimizing risk by distributing your holdings. Don't put all your eggs in one basket. We're going to put out a video discussing this topic further, and we're going to share our private portfolio in our premium newsletter once that opens up. But two great examples of how to structure your portfolio is either by sectors, so devote portions of your portfolio to different types of coins to spread out your exposure. For example, platforms 25%, currencies 25%, privacy coins 25%, and 25% in wildcat cryptos that have promising tech but low market cap, ICOs, etc. The other way you can structure your portfolio is by risk. So 50% to coins in the top 10, 25% to coins in the top 25, 15% to coins in the top 100, and the remaining 10% to wildcat coins. So when picking your investment portfolio, you need to be an expert in fundamental analysis for speculative assets. This is not easy compared to something like the stock market, where information is much more readily available. You need to be able to identify red flags, understand how to evaluate potential, and see opportunities before others do. With the unregulated nature of this space, there's a lot of potential for scams and fraud. Understand that most coins will not be around in 5 years. Seriously, the churn in crypto is amazing. So to counter this, take your time, do your research. It's worth it and will save you a lot of heartburn. I cannot stress this enough. You are buying an asset with your hard-earned money. It should have some utility. Start by reading the white paper that's on the main site for the coin. You can avoid a lot of scams simply by critically evaluating the question, why does the coin exist? Is it simply trying to apply the blockchain to something that doesn't need it? Or is there a transactional inefficiency or problem that the unique properties of the blockchain can solve? You will find that most people who made 6 figures or more in crypto did it by holding over the long term. Very few get rich by day trading. If you do short-term trading, do it when you have high certainty that specific news will lead to an increase. Some of these specific events are upcoming roadmap item releases, fork airdrops, exchange additions, partnerships. Short-term buys like this are smart moves based on some underlying value assumption being changed. But always remember the phrase, buy the rumor, sell the news. Do not be surprised that prices take a dip after something is officially announced. Timing the market can be like catching a falling knife. So for most people, look for an entry point, set stops for yourself, identify an exit point, and just sit back. Day trading is an exceptionally difficult skill to master in a market as volatile as crypto. So our last rule is just have fun with it. Understand that you're in the 0.1% of investors and 0.01% of the population actively investing in crypto. This is still a new space with a lot of potential and a lot to prove. Many people are skeptical, but that's your opportunity. Those same people, after bashing Bitcoin and crypto, turn around and say, oh, but only if I had invested in Bitcoin in 2009. It's cognitive dissonance, and there's a lot of people on the news who are going to try to tell you what to think regarding crypto. You should make your own judgments, do your own research, and get active. Have you invested in a crypto? Join its community. Talk to other people who've invested in the same one. Learn every day. One of the best things about cryptocurrency is just how excited people are about it. Seriously, it's infectious. Sure, a lot of people are in it for the money, but there's also a lot of people who really believe that this technology can change the world, and we're some of them. So now that we've covered the fundamentals, and we've covered some education, you've got a solid foundation. So let's move on from some of the rules into some of the tools that you'll use to invest and research crypto. We like CoinDesk.com and Cointelegraph.com to see an overview of what's going on in the crypto world. These are really good news sites that you should check every day. Another interesting site is CryptoPanic.com. It's an aggregator of various crypto sites and news, and it's filterable. Another site we recommend visiting every day is CoinMarketCap.com. It's not just for checking prices. They also have the most convenient way to start your research, as they have links to the blockchain explorers, the official websites, and also have a useful API that can be linked to Excel. An alternative to CoinMarketCap is OnChainFX.com. In some ways, it's a better version. It has a lot of columns and you can add flags. The only downside is it only has 61 cryptos, but it's always adding new ones. To see the market at a macro level, we recommend cryptomaps.org, which is a visualization of price across a lot of the different segments in crypto, and is a really nice top-down view of just what's the market doing. So if you're more interested in ICOs, we recommend ICOtracker.net. It's a nice site to see which ICOs are coming up. Another good one is ICObench.com. It does nice summaries, shows teams, milestones, and financials, and even gives a rating for each ICO. Another interesting site is solume.io, which compares the number of Twitter mentions to the increase or decrease of price for a certain crypto. Another one to keep in mind is bitcoin.tax. and it helps you calculate taxes owed for your crypto gains. But quite honestly, if you have to worry about taxes, it's probably worth hiring an accountant to help you with this. We at ReadySetCrypto are not going to touch tax advice because it is a rabbit hole for crypto. Another cool site we can recommend is buybitcoinworldwide.com, which allows you to see the best exchange for your respective country. To track your cryptos, two popular apps are Blockfolio and Delta. Personally, we use Blockfolio, but Delta is really growing on us. What's nice is that with these apps, you just plug in what coins you bought, where you bought them, and the apps auto-generate the latest price of that coin so you can see in real time how your crypto portfolio is doing. So lastly, let's get into some of the sites to use in order to do the actual buying, trading, and storing. Now, Coinbase is probably the best site to trade your money for crypto. It's available in a bunch of different countries, and they are probably the best option if you're using a credit card. What most people don't know is they also own the exchange GDAX. Additionally, a lot of people don't know that if you bank transfer funds into GDAX and use those to buy crypto through a limit order, you don't have to pay the fees people normally pay on Coinbase, the 1.5 or 3.9%. The downside is you have to wait a week, but it's worth it if you don't want to pay fees, especially for a large amount. We've got a link in the description, which is a referral link for Coinbase. And if you sign up through that and invest at least $100, you'll get $10 of Bitcoin for free. And so will we. So we recommend buying Litecoin and transferring it to a crypto exchange if you want to trade crypto for crypto. Our favorite crypto exchange is Binance. Again, check the description for a referral link. So for example, you hear about some cool coin you want to get into. You check its page on CoinMarketCap, check the markets tab, and see it's listed on Binance. So you buy Litecoin on GDAX, get the deposit address from your Binance account, paste that in, and now you've transferred your Litecoin from GDAX to Binance. Once there, most coins are traded against Bitcoin. So all you have to do is sell your Litecoin for Bitcoin, then trade your Bitcoin for whatever coin you want. It's that easy. Some people ask, why don't you just buy Bitcoin and transfer that directly? Well, that's because Bitcoin is currently encountering some scalability issues. It's the number one cryptocurrency, so a lot of people are using it. As such, the transfer times and the transfer fees are pretty ridiculous. And so we recommend using Litecoin to transfer between exchanges. We also like Bittrex.com for exchanging crypto, and another up-and-coming exchange is KuCoin.com. For storing Ethereum-based cryptos, we like myetherwallet.com, but check to make sure your coin is supported. Okay, so now I'm going to turn it over to Doc, who's going to explain how to properly chart cryptocurrencies.
Hey guys, it's Doc for ReadySetCrypto. What I want to talk to you about today is just the whole notion of charting. And this is especially for those of you that are fairly new to cryptocurrency or even just new to trading overall. So what you have here, if you get into your Coinbase account or your fiat broker, you're going to see some very simple tools as far as price charting. If we go over to here, we can see that Bitcoin over the course of the last week, this is the price chart. So we have a nice visual here of what's going on. We can select the monthly chart of Bitcoin, even the yearly chart of Bitcoin. So we can kind of get a graphical representation about what the price performance has done. Now, I do want you to understand that this is a relatively new thing, this whole charting thing. When I say relatively new, it's only a few decades old. Because what used to happen is you used to get everybody around a trading pit, right? So you throw everybody into this trading pit, and this is, real Fisher Price graphics here, but everybody would be able to see everybody else. And this is the very notion of price discovery, is that you would be able to see and hear and feel the price discovery, and in some cases even smell the price discovery as people get nervous, and you can see the look in their eyes in terms of whether they're holding a strong position or whether they have a weak hand. But one by one in the equity markets, these pits are just disappearing, and has really been changed by all the distributed trading that's around the world, this electronic trading. And cryptocurrency, of course, is based on electronic trading from day one. So there's no new paradigm to encounter. So most traders that trade in cryptocurrency are used to using charts, this visual representation. And myself, I come from an engineering background. I'm used to looking at things in a very graphical nature. It makes more sense to me to see a picture instead of having somebody describe it to me in words or numbers. Okay, so after that little history lesson, back to Coinbase here, you can see that these are relatively simple tools. We just have a line here, and it just represents the area under the curve, and we can kind of see how things are. And this is all well and good. I'd say for probably 80% of people out there that are just buying and holding things, this is fine. This is absolutely all that you need to be able to trade cryptocurrencies. You basically are trading with a trend. You can see when it's going up, you can see when it's going down. You're able to make decisions with this. So again, for most people, this is adequate. However, if you're going to trade altcoins, you're going to be setting up with different brokers out there. So one popular broker out here is Bittrex. So you get into Bittrex and you say, okay, what additional tools do I have? And what you're going to find is if you click on these markets, we're going to find, we can look at things like Ethereum, and we can pull up a chart of Ethereum. And this one looks a little bit different than the other chart, right? It's got actual candlesticks these are candlesticks, instead of just a line chart with an area. We also have volume down at the bottom here. And we can also find that we can change the chart style. We can go to bar charts. We can go to color bars, hollow candles, mountain charts. Mountain charts are kind of what we saw with the Coinbase. And we can also add studies to this. Now, this is where we get into kind of this whole other world of complicating things, because all of a sudden we can see things like the average true range and the Bollinger Bands that I talked about the other day, and a very popular indicator like the MACD, stochastics, volume oscillators. It goes on and on. There's literally hundreds of these different studies that show a different representation of what's going on. They all basically feed off of price, volume, and time, however. So all of these are just derivatives of price, volume, and time, just put in a different manner. They're just different tools that you have available to you. So I would also say here, for most people, the majority of people, the charting tools that you're going to have in a package like Bittrex are going to be absolutely adequate for what you want to do. Again, if you spend less time trading in and out of a position and more time just trying to figure out what to buy, and then adding that to your portfolio, and then eventually looking for an exit point on there, which is the majority of most traders out there, or should I say investors, then these tools are going to be absolutely adequate for you. However, I'm kind of picky. I've been trading and watching charts for decades now, and I kind of like what I like at this point in my career, right? You get used to certain tools, you get used to a certain look on a chart, and you want to be able to replicate that without any delay, without any impediment to that. So you want to be able to create a view where you can just look at a chart and immediately know what it is that you're looking for, such as chart patterns or buy spots, or like a couple of days ago, the swing test that I talked about on NEO. Now, if there's one thing that talking about charts brings up with traders, it's sort of this religious argument of which charting package is best, and I really want to avoid that. I just want to discuss with you what works for me. What I've found in the crypto world here has been so far the best charting package that I've seen is TradingView. This is until the big dogs get into this space, right? Because eventually what we're going to have is the trade stations of the world, and perhaps the TD Ameritrades of the world, Q charts and eSignal and Metastock and all the Sierra charts. I mean, there's literally dozens and dozens of these vendors that are out there. And TradingView has kind of beat them to the punch in terms of the crypto world. Nobody is giving this space any merit yet. And I think what you'll see is you'll see them scrambling into this space. So what's cool about TradingView is that it's free. You can actually get it for free. However, it is a little bit neutered, of course, in the free version. So there's a lot of tools that you would want to have if you're somewhat advanced in terms of crypto trading, such as if a specific trend line gets touched, you would want to have an alert sent to your email to say perhaps you want to exit this position, which is going to be important because this market trades 24/7. So you're going to want to know when to get in, when to get out, those kind of things. And an advanced charting package will provide those for you. Now, another manner that you can get the TradingView interface through another package, so TradingView has actually been really smart in terms of how they've done this, is Coinigy. So what Coinigy does is it actually will allow you to chart from different exchanges. Remember, the price is not always the same from exchange to exchange to exchange. And some of this arbitrage has yet to be figured out. partially because some of the transactions take so long between different exchanges. So Coinigy allows you to look at the same pair, whether it's through Binance or Bitfinex or Bittrex, or I think there's 42 when I counted these yesterday, different exchanges that it will pick up pairs from. And as you probably know by now, with some altcoins, they're only offered in some exchanges. And so this allows you to chart that coin normally versus Bitcoin, if it's more of an obscure coin. Now, before you go hog wild dumping a bunch of money into charts, slow down. First of all, if you're just a simple investor, if you're buying, one of the big 3, big 4 coins that are out there on Coinbase, probably no real need for you to scale up in terms of your tools. As long as you're kind of a buy and hold investor or a hodler, right? It doesn't really matter that much, the tools that you have. But if you do consider yourself more of a trader, someone who's looking for ideal buy points, someone that's trying to maximize as much edge as possible, or maybe you've got a smaller account and the only way that you're going to grow that thing fast enough is to be able to get in, get out, scale in, scale out of positions, and continue to build your account very actively, then you need the best tools that you can. And actually, they're fairly inexpensive still at this point, and the answer will get better with time as more competitors start to flood into this marketplace.
So guys, thank you very much for watching. If you enjoyed the video, please hit the like button. And if you're new here, please hit that subscribe button so you can continue to see high quality crypto analysis. And don't forget to hit the bell next to the subscribe button to be notified when we put out new videos. Additionally, check out the description for a link to our daily newsletter. And pretty soon here, we're going to be offering a paid advisory newsletter, which will give you insight to the private collection of coins that we're looking at, some things we're watching, and many more premium features for our paid subscribers. Thanks again for watching, guys. I'll catch you in the next one. Cheers.